make you want to move, make you get up in the morning, make you go out and get that bread. Hello, I'm AC Cash, and this is
JD. Boom!
coming to you on behalf of PivotPointInvestors, where we take the average investor and help them leverage up and see the things they'd like to make into reality in their life through small investments in the stock market.
That's right.
It's an interesting game to
Go.
play,
Very.
stock market investing.
Very.
But today, JD, I think there's a lot of stuff in the air.
It is.
Some of it's real, some of it's false, some stuff is lies, some is truth, and you just don't know what to believe. But we're gonna deal with perception versus reality.
Okay.
So, there's been a lot of stuff going on in the market, dealing with small companies, big companies, and one particular company that you've been very interested into lately, and that's Volkswagen, VW.
VW.
It's an odd thing.
Okay.
Because you got Bentleys, Lamborghinis, Porsches, Audis, and then you got VW, and you wonder what all those things have in common. The odd thing about it is that Volkswagen owns all those brands.
They own Volkswagen. When you dig down, Cash, you saw they own 12 different car brands.
That's right.
In the world. Like, who would have thought that?
And that's the reality.
Yeah.
But the perception is,
Oh, this little old
guy.
Volkswagen.
Yeah, Volkswagen. They used to make that
one.
little Beetle, right?
Right.
In 66, they made the little Herbie the Love Bug.
Yeah.
They made all that. And then you say, oh, Porsche, the Lambo, dog.
Yeah.
Lambo, they got to be a big company.
$8 million
Bugatti.
for an $8 million
Handmade
Bugatti.
cars, yeah, all that beautiful Italian
And
craftsmanship.
I'm a Bentley lover.
I can dig
it.
But then who owns who?
Volkswagen.
Volkswagen owns them. Tell me
That's
about
right.
the company a little bit.
Volkswagen is a company been around since 1937. After the World War, they came on the scene and never left. You talking about they made a lot of money in their real mark in the 70s with the bugs. Did you have a bug, man?
I did not have a bug.
You didn't have a bug.
Never had a
Did you
bug.
date a girl with a bug?
Never dated a girl with a bug.
You gotta ask that question
I
because it's a
think-
popular car,
It
right?
was.
Popular car. So that's where they made their mark. But if you realize they have over 100 factories in all these different countries in the world on 5 different continents.
Okay.
Like when you drill down and say, man, this whole little old VW is not that little.
No, it's not.
And even more interesting to me is the stock is trading less than $20 a share.
Less than $20.
You're talking about $19, around 11, 10 cents a share.
Okay.
From an affordability standpoint, it's there. From a analyst review standpoint, cash flow, debt, all the different things that this company has, it all checks out. It's even more interesting when they own Porsche, right? And I say, we saw the report and looked at the article and some analyst review around Porsche and their new electric Taycan vehicle where the tires light up, the rims light up and everything. It's slick now.
Now, the purists gonna be mad because you gotta say Porsche.
Porsche.
You got Porsche.
Okay.
Porsche. But I
So-
understand. But the most exciting aspect of their company these days is what about their future?
Well, the CEO released by 2023, they will have and build and ship more electric vehicles than Tesla.
More than the beast industry?
More than the biggest EV producer on the planet. They will produce more. And it's very easy to see how you got 12 different brands,
Right.
and then you got a Porsche, which is popular. You got a Bentley, you got a Lamborghini, Bugatti.
And Audi.
And Audi's the
Just to
big
name
one
those,
that,
that's
imagine how many Audi owners in the U.S. there is, in Canada.
Probably driving it and don't know.
Absolutely, VW
Is the owner.
is the parent company.
That's
Absolutely.
right. And so that deals in that perception versus reality. So when you deal with real estate, you're dealing with small business, you're dealing with all these companies and businesses, a lot of things, the glitz and the glamour seems to get all the headlines.
Very true.
But the guys in the mine, the guys that's grinding, the guys that's getting it, are the Volkswagens of the world.
Absolutely.
They're just dependable, they keep moving, and they keep gobbling up all the glitz and the glamour. All the Bentleys, all the Lambos, hey, they can win all the races. That's beautiful.
Engineering.
But who's the big daddy behind it?
That's right. That's right.
That V and that W.
That's right.
Okay.
Since 1937. That's a long time.
That's a good run.
That's a great run. You coming up, we say a decade out from 100 years
Right,
in existence,
right.
So, but for them to retool and have all this great success with gas and diesel, and for him to say like that's a ramp up, like they're talking about putting 50 billion into electric vehicles, just in the next couple of years.
So that gets you excited toward their future.
Absolutely, that's money. Wait, that's cha-ching, bro. Hey, come on, cash. What the name of the game is buy low, sell high.
That's
so
right.
if you buy it at 19 and Analyst Review has it at 40.
But you giving stock advice?
Not giving stock advice.
You're not telling everybody run out and go get.
I ain't say, hey, listen, you need to check with your own trusted financial professionals, advisors, that whole deal. You know, the place where you get your information from. It could be your uncle, it could be your dad, it could be your lawyer, it could be a financial advisor, it could be an insurance advisor. Whoever you get your information from, check it up, read about it. You know?
But as a financial advisor yourself, you probably not telling them to go out to the attorney to get no stock tips. Like
No. But whoever your trusted source, your trusted source that you typically, they don't lead you wrong too many times, you know. Out of 10 times, 8 to 9, you're going to be in the general sphere. So that's...
Maybe they could just stick with PivotPointInvestors.
They could, and be a member. And you like us, like our YouTube channel, like us on Instagram, Twitter. And then not only like us and follow us, but hey, hop in and become a member, because with membership you get certain things and access, and you get peek behind the curtain that non-members don't get. And
they say membership has its privileges.
There you go. There you go.
Follow. That's American Express follow.
There you go.
And when they got you saying the slogan, you know the company's doing something.
Absolutely.
Okay.
Absolutely.
So that's great. So that's Volkswagen.
That is Volkswagen. Man, that's Volkswagen. So automatically, I'm thinking, once we get through some of this COVID stuff, Cash, we got to go to Germany. And we got to do a show just out there about Volkswagen at some point.
Maybe we can do a little something.
Yeah, we got to.
I haven't been to Germany in dozens of years.
I know, you've gone. I've never been to Germany. I've been to London, but I've never been to Germany. So we need to go and check them out. We need to take the people where the action is.
That's a good deal.
Take the people where the action is.
We can do that. Yeah. So we just want to give a little flavor, something to look at, because Tesla's been doing this thing.
Absolutely.
Now, they won a huge run, then they pulled back, and now
Today they went back up, you know.
About 8% or so. Back. What was the loss? About 30 or 40?
Oh, they lost at least 30%. I want to say 33% yesterday. But most of the stocks, like DocuSign lost 38%. It was in that tech sector, just took a hit. It just took a beat.
So when something like that happens, you're supposed to run to your fund manager, run wherever you're storing your stocks and sell, right? That's what you're supposed to do when they had a big pullback. Man, I'm scared. I don't know what to do. I gotta sell.
That's fear. That's fear, and that's the herd mentality.
Okay.
Now you sell if you up. So for example, if you were up 50% and during the drop you're still up 30%, and you want to go ahead and sell and take some profits, that's fine. While you have lost, quote unquote, unrealized 20%, you still are profiting 30% on that transaction. So in that example, hey, sell away. But if you were positive 30% or positive 50%, and then you go to negative 20%, you don't need to sell.
You don't sell. So don't let that fear, that false evidence appearing real, drive you to lose money.
Absolutely.
In a realized fashion, not an unrealized fashion. So
you got to remember, the people got to remember that when it goes to red and it's dipping, if you believed in that company in some way, and there was a reason why you bought it, you need to stay with it.
Stick and stay.
You need to stay with it. You need to stay with it. Outside of an Enron type of scandal situation, debacle.
We're going to
Like if it's not that, you need to stay with it, because 9 times out of 10 it'll recover.
That's good information. That's good advice, because a lot of times, when everybody's panicking, you jump on that ship. That's a bad ship. You see this Titanic going down. Oh, let me ride with it. No.
That's right.
Sometimes it's just a little rough seas. It's not a Titanic. It's just rough seas. If you endure that, same way it goes up, it comes down. But if you listen to the right people, you'll know when the bottom is really coming.
Without a doubt.
You'll know when to throw your hat in. Sometimes you got to just leave it on.
You say across asset classes, So you gotta learn how to buy it right?
Okay, yeah.
So when you buy it on sale, when everybody else running for the hills,
that's right.
And you come and say, oh man, that was 20% higher a day ago. That was 40% higher last week. Let me buy it on sale. We understand buying shoes on sale.
Right.
You know, your nice shirts, your watch, your hat. We don't understand buying assets unless you're in the game. You understand, because I can even get mad with you in real estate and with business because you want to buy it with a deep discount, period. Like, that's just the way your mind is wired.
For sure.
But I'm like, hey, we could do a win-win. Where, you know, you might not get the deepest cut in discount you can get, but they can get a little bit of profit. You get what you need, and it's still a win-win. So.
Okay. So the takeaway is we can understand that Volkswagen, we have something to look forward to there.
Absolutely.
And understanding
growth potential, great growth potential.
That's
and that's the key word, people. Potential.
That's right. Potential. It has runway to grow.
Oh, absolutely.
Okay, but understanding the dynamics behind and the fundamentals behind a company like that, that built itself over years since 1937 through strength, and then acquired key components. They didn't have to be the shiny guy. They could just buy Bentley. They don't have to be the shiny, slick auto. They can buy Lambo and still be the behemoth in the background. Secondarily, we're talking about on the stocks, we're talking about how the market, you don't have to let that fear, that false evidence appearing real, drive you to sell just because we get Tesla type pullbacks or pullbacks where really it's
Apple,
just
Tesla, all
that's
of them.
right. But it's temporary.
That's right.
It's temporary.
Fundamentals still the fundamentals of the company.
It remains the same.
It's just usually a bunch of investors decide I'm gonna take some profit.
And you don't have to follow.
You don't.
Let them do their thing.
Yeah, let them do their thing. Yeah. Everybody has a different point, exit entrance and exit point. And so you got to automatically, with each stock, determine what is my exit strategy? Where am I getting out? Once I get to this level, I'm out. For me, I determine it for every single stock. And so most of the time, I'm going to exit once I hit a 20% mark. And it's regardless of the stock. That's a JD Boom thing though, right? But I have had to, it's trial and error and years of, let me be greedy. Oh, I just got 20, let me go to 25. Let me go to 30. So because I've taken those losses where I've been up 30 and then been down 17, and I had enough of those experiences, I'm like, well shoot, once I get to 20, I made a nice return.
Yeah, you can go take that off the table. Give it a little boom or something.
Yeah, at least take 50% off, and then I'm running with, or take out my total investment and running with house money. It's a little bit different, but I'm protecting myself, and so you got to hedge against a down market.
Sounds good. Sounds good. Well, we obviously got the bucket full for the day.
That's it.
You know, so
we gave him enough. I think we gave him enough.
We leave a little meat on the bone.
Yeah, that's right. That's right.
So we're gonna conclude and say, hey, we appreciate you tuning in. Again, we're Pivot Point Investors, where we help the small guy get into the stock market through common sense, tried and true ways to invest their money. Not giving stock advice, just a couple of guys giving a little information we've learned by some of those lumps and bumps we've gotten over the years, dealing with business, dealing with real estate, and dealing with stocks. So on behalf of Pivot Point Investors, I'm AC Cash, and this is
JD.
Telling you we hope all your investments are profitable ones. Take care.